that one big thing in the Fed statement yesterday.
The QE, not QE. That is the question.
It was so funny. I was kind of watching a press conference and I had Twitter up. So you get all the snarky comments. And I follow a lot of economists, a lot of Wall Street guys, a lot of the media guys that really follow the Fed. Not all of them, but some of them were so quick to call it not QE. Guy from the Financial Times says, don't mistake this with QE right off the bat. And look, the Fed calls it reserve management purchases. So obviously it's not QE, it's RMP. This is how it works. The Fed, starting I think December 10th, will be buying $40 billion a month of short-term treasury bills or possibly notes. They will be adding to their balance sheet. The balance sheet will be growing by $40 billion a month for a few months. The impact is that they will add reserves to the banking system. That's QE. I don't care whether they're buying a one-day bond, a bond that matures this Friday, or a bond that matures 400 years from now, 30 years from now, whatever it is. It's QE because here's what happens. Let's just say they buy a one-week bill. You say it's not really QE. It's there for a week and then it matures and it goes away. That's not really the way it works. They buy the one-week bond. It's there for a week. Next Thursday, it matures. The Fed doesn't let their balance sheet drop. They try to maintain a balance sheet at a certain level. Right now, it's going to be growing 40 a month. So when a bond matures, they have to buy another bond. So maybe they'll buy a series of one-week bonds for the next 30 years. That's the same as buying a 30-year bond. They're not doing QT and letting bonds mature. And what's interesting is now we're starting to get conspiracy theory, but this could be a little bit of a cover-up where they say they're going to buy bills, and they buy bills. So they're 3 months, they buy 120 billion bills. Those bills all mature by the end of next year. And as they mature, they're buying 5, 10, 30-year paper. So effectively, this is QE as most people think it is, where they're buying longer-term paper.
We've had variations of QE, not QE before. It is what it is. The media's perspective is, and those saying this isn't QE, is technically they're correct. The Fed didn't come out and say, as they did say in 2020, hey, we're going to be doing $120 billion a month, expanding our balance sheet, those type of things. That was clearly QE. This isn't QE because it's not an overt increase of the balance sheet. It may still increase the balance sheet. The goal is to kind of maintain the stability of the balance sheet and make sure there's liquidity in the markets. But yes, it's at the end of the day, if you're buying bonds, putting them on your balance sheet, taking those off the hands of the banks, it's QE.
And putting reserves in the banking system that can be lent.
Exactly. So it is QE. But again, there's going to be a lot of debate over this. The debate's fine. I'm not sure it really matters at the end of the day. The real question is it putting liquidity into the banks? Is that going to support the financial markets? The answers to that are yes.
Catch me daily on The Real Investment Show. The link is in the description.